This is Ethereal TV with your host, Doc Blake, bringing to you the seventh episode of The Last Piece to the Puzzle. The motto for me is silver, gold, and cryptos equals freedom. And why? Because they are decentralized, they're scarce, and they're valuable in nature. And when I say freedom, I'm talking about monetary freedom because true freedom can only be achieved through truth of the mind. So, yeah, let's get into the price action today, though. We have Bitcoin currently at $8,649.75. Wow, man. It finally broke through that 7.7 level, as you see in the title of the video. But Litecoin is at $48.86. Gold is at $1,714.72. Silver is at $15.29. So there's your prices for today. And looks like Bitcoin is creeping up, man. And I hate to say it, but personally, I'm kind of rooting for it to go back down right now. I would like to get some more cheap Bitcoin. And, I think it's kind of buy the rumor, sell the news. And that's kind of what's going on right now, where Bitcoin is going up because the halving is coming up. But you already know, right? Directly as the halving is happening, and slightly after, that's when everybody's selling the news. You know what I'm saying? So that's my personal strategy right now, is to look to that point to scoop up some cheap Bitcoin possibly. And but I'm always excited to see it go up because I always have my hodl position, and so I'm always excited to see it go up no matter what. But who wouldn't mind getting some more cheap Bitcoin right now? So wow, that's impressive right now, especially in the middle of the coronavirus pandemic. That Bitcoin is still pumping. It's still good to see that halving is kind of doing its thing as it's supposed to. As of right now, at least that's all we can go off of. And yeah. But on the menu today, some articles that I found, interesting articles about real estate. It says and this is by Yahoo Finance. It says U.S. home price growth accelerated ahead of coronavirus pandemic. U.S. home price growth continued to accelerate before the coronavirus forced states to order shelter in place. Standard & Poor's said Tuesday that its S&P CoreLogic Case-Shiller National Home Price Index posted a 4.2% annual gain in February, up from 3.9% a month earlier. The result's best estimates of 4.1% gain according to Bloomberg. So as you see, right before the coronavirus, you've seen that real estate market peak, I would say, as of this moment, right? It hit its peak, and now you're seeing, well, let's keep going. The 20 city composite posted a 3.5% annual gain, up from 3.1% in January, far outpacing estimates of 3.19% according to Bloomberg. The 20 city composite was led by Phoenix for the ninth straight month, posting a 7.5% year-over-year price increase. Every city in the 20 city composite reported an increase at a faster rate than in January. So as you see, it went up right before the shelter in place happened, as you would expect. That's not unnormal. The stable growth pattern established in the last half of 2019 continued into February, said Craig J. Lazzara, managing director and global head of index investment strategy at S&P Dow Jones. In a press statement today, reports covers real estate transaction closed the month of February and shows no signs of an adverse effect from the governmental suppression of economic activity in response to the COVID-19 pandemic. As much of the U.S. economy was shuttered in March next month, data may begin to reflect the impact of these policies on the housing market. So basically saying it's kind of holding true as of right now, but yeah, let's continue on with the article. In March, existing home sales fell by the most in almost 5 years as the coronavirus pandemic started to take a toll on the U.S. housing market. The National Association of Realtors said existing home sales tumbled 8.5%, the largest percentage decline since November 2015. New home sales also fell 15.4% in March, the most in more than 6.5 years, according to the U.S. Commerce Department. Indicated by the existing home sales report, the spread of COVID-19 disrupted sales activity in late March, said Nomura in a recent research note. The pullback in demand should slow the acceleration of home price appreciation, but decreases in supply at the same time should offset some negative impact on prices. There's been a shortage of new homes since 2014, and the lack of inventory in keeping prices up. Prior to the virus, historically low interest rates had set this year spring home buying season up to be a good one, giving potential buyers more purchasing power, but there has not been enough supply to keep up with demand. That's very interesting. I mean, so basically they're saying that the supply the shortage in supply, since nobody's really building that many homes right now, should offset the tumbling price right now, which is a little weird to me. Because think, there is only a decrease in supply if houses are getting sold, right? There's only a decrease in supply if houses are getting sold. If they're not getting sold, even though the rate of them being created has fallen, that's on an old demand number. That number came from previous months because you don't have the data to calculate this, except this last month, which we've seen it declined what, 15.4% in March. That's a lot. 15.4% in March. As far as new home sales, that's a whole lot if you really think about it. Um, so that's just a little bit of information on the real estate market. My opinion on that is, if you're able to, unless you really have your mind set on buying a home right now, you might want to just wait. This is not financial advice. Anything in this video, this is strictly for entertainment. And but that's my opinion. I would just wait a little bit if you're going to make housing purchase, because you might be able to get it for a lot cheaper. And on top of that, your house could potentially decline a great deal in value if there's no demand, or also if no one can afford them, unless and that would bring the prices down if everybody can afford a house. So there you have it for the real estate market. And I kind of want to get back to the topic. Bitcoin breaks to 7.7, but here's a little article from CoinDesk. Bitcoin rises above 8.1K as bulls eye April gain for fifth year running. So something special about the month of April and Bitcoin, if you ask me. And the article is by Amkar Gadbol. It says Bitcoin's price jumped above 8.1 on Wednesday, making an April gain for the fifth consecutive year, all but certain. This is why you always want to have a HODL position, just in case things like this happen. And it's like, if you're paying attention, then you kind of know in April, Bitcoin spikes up. The top cryptocurrency by market capitalization rose to $8,191 at 11:15 UTC, its highest level since March 10th, according to CoinDesk, Bitcoin's price index. At press time, Bitcoin is hovering near $8,170, representing a 4.5% gain on the day. Prices are now up 26% on a month-to-date basis and 13.6% year-to-date. An April gain would be confirmed if prices hold above $6,428, the monthly opening price through Tuesday UTC close. While price pullback in the next 24 hours cannot be ruled out, a drop all the way back to levels under 6,428 looks likely, as technical studies are biased bullish, and the speculative buzz surrounding the upcoming mining reward halving is likely to limit any losses. So Bitcoin looks set to end April in the green, having put in a positive performance in the same month over the last 4 years. So and here's a little chart of the April historical performances of April 2012 through 2020. I mean, just look at that, man. So if you are an investor or a trader, this is very, very valuable information. And you got to look at everything long term. So even if you miss this April, remember this for next April, right? Because it's consistent. This is a consistent piece of data right here in the Bitcoin machine, right? So yeah, I think that wraps it up for me today, guys. And this is your boy Doc Blake with Ethereum TV, giving you the last piece of the puzzle.